Okay, I think I'm streaming again. There was a lot of movement yesterday after my stream, which I was kind of expecting. I didn't expect it to be down 100 points. Let me see, make sure my stream is working. Good. But yeah, big down day yesterday, which is kind of what I was looking at, and then it closed towards the bottom. So I expected it to continue today, and now we're not even open yet, and we're down 73. Volatility is up over 22. So this is what I wait for. This is a good time to scale up. But it's only been 2 down days here, so we could see it continue a little bit more. But this could also be the bottom. We'll have to see where it finishes today. If it finishes down at the bottom, like it did yesterday, it could be a continuation a little bit further. If it comes back up and closes within the expected move, and I think that might be a sign that it could be going up higher, kind of like this candle here. See it drop down a lot, came back up, closed inside the expected move. Volatility probably came in a little bit or didn't increase that much. We can look at the day, November 7th. November 7th. Yeah, see, volatility actually went down. So market down, volatility down, and then it reversed. So that's what I look for. With the market down a little and volatility down a little, you make money on both sides, because when you put the 111 trades on, let me make sure my stream's on. When you put the 111 trades on, you want the market to kind of fall a little bit, but you also want volatility to go down. So when that happens, you make money both ways. But you also want volatility to go down. Okay, it is working. Okay. So dropping back down here, volatility at 22. If you did put one of the 111 trades on, they're called bear traps. If you put one of the bear traps on here, it might be losing a little bit of money now, because we're probably a little bit lower. Volatility is probably a little bit higher, but it's still probably in a good position, where if the market just kind of stays here, volatility will go down and it'll be right inside your trap, which is nice. But let's go look at some of the prices. So at the money is over 200 now. Yesterday it was like 150, something like that. You can go all the way down to 6,000 and collect a 63 credit. So that's pretty nice. You can go to a 5 delta and collect 20, over 20. So that's nice. All these prices are inflated because volatility spiked up. So basically you can sell anything here and get way better price now than you could have a couple days ago. But let's look at that trade that I was looking at the other day. It was 63, 61, and 55. And then it was 4 of these, 3 spreads. Oh yeah, I need to turn off my... So 207. So it actually would still be a slight winner, because it was 215 the other day. Which is pretty interesting. Even though the market's down more, volatility is higher, it still would actually be a slight winner. You would actually be making a little bit of money. But that's already a series of trades. But now's another good opportunity to put something else on. Let's just look at it again. This is if you wanted to do it now. I wish I could put another one on and show you what it would look like. But this is the price right now. You can get filled at this right now if you wanted to. It's even going down more. The price is going up. 3,600. It's pretty similar to what it was before. But yeah, let's look at another one. Or actually, I should have just taken the one off. That's something nice you can do actually. If you right click on any of the prices, you can see that option in a chart. It didn't work. I don't know why it didn't work. That's not a good example. You got to go to one of the even numbers because it just puts in other options and they don't have a long history. So if you go to like 6,400, that should have more. It doesn't. Maybe it's because of what expiration I'm picking. Let's see, we'll go closer in time. One of these. Yeah, so you can see this is that put option. It'll spike up, it'll come down, it'll spike up, it'll come down. Now it's spiking up again. So it's a good time to sell these put options when it spikes up like that. We're down 75. It just hit 75 a second ago. Yeah, if you were just short, you could just sell the futures, put up a couple $1,000, you'd be up a shitload of money today. The best way to get short or long is just to buy or sell the futures. You get the most leverage, and you don't really have to put up that much money either. You can make hundreds of dollars, if not thousands of dollars a day, just doing that. Not even trading the options. That's more like day trading kind of thing, but I don't really do that. But I would be pretty good at it. I called this big move. But let's look at a 1-1-1 trade. So with volatility so elevated, you can go really far out of the money. Let's just do like $100 wide for 10. And then you can go out here and sell something like way far out there. You still get a credit, you barely put up any money. Your max profit is higher than what you'll lose. The buying power on futures is generally what you can expect to lose if it goes against you. So that's kind of what your risk is. But like I said before, you want to hold a couple $1,000s for every short put that you have that's not covered. So like this short put's covered by this long put, but this short put is just by itself. So you want to have a couple $1,000s on the side just for that. But when you do something like this, when volatility is expanded, you got your break even way out here. That's like 1, 2, 3% chance of the stock actually getting out here. So that's why your buying power is only $500, because that's kind of where your risk is. But if it does start to move in that direction, you'll actually make more money. If it stays here or goes up, you'll make a little bit, but it's not that much. So these are good to put on if you think the market's going to fall a little bit more. And then if it does fall a little bit more, that's when I'll sell another put. You don't want to be too far away. And you can do more of these too. So it'll set up kind of what I was looking at before. See how you get, this is your profit zone, then this is where you would lose a little bit, and then you have another profit zone here. See, this is where you get that kind of step. But it adds profit to your tail. But sometimes I like to widen this out a little bit more. So you can play with it on here and see, the wider you make this, the more it moves your break even down. See, the break even's right here. So you move your break even down, but you give a little bit of your profit to the upside. And now because you have this put that's not covered and this put that's not covered, you have a lot more risk on the downside, but that's your trade-off for making a couple hundred here. Now you can lose a couple thousand there. You can move it down. So your buying power, you got 1,000 here. This is a huge trap. I don't normally buy them that big. I'll do $300 or $400 sometimes. So 6,100, 5,700. You have a really big trap. Your profit at expiration, if it pins right here, is like almost $1,500. You can see it right here to the right. But you're never really going to pin that. What you can expect is something down in here. But you can slide this back and forth. That's why I really like Tasty. You can see how it affects everything just by sliding these back and forth a little bit. Just something like that. It's actually, you actually buy that, so you wouldn't make any money to the upside. But you have this huge tent here. You don't want to move that one. You want to move this one. So yeah, that's what I like doing. I like setting up these 111s. This is a 122. But these 111s, this is what I like. You set up these 111s like this, where sometimes I'll buy them, honestly, so you don't have any profit to the upside. If anything, you have to pay a little bit on the upside. But if it falls a little bit, you can set up these huge traps like this, where your expected P&L is over $2,000. And I mean, look how much you have to put up for it, $200. So it's basically a hedge when you have something that's this wide. $400 here, and it's almost covered. you just pay a little bit. You can really put your break even way out here. Like the market's like almost never going to get out here. It's like 1% chance. And then if it does move down this way, you sell at the money put. And then your risk for that at the money put is covered by this trap. And then if it does go back up, you make a lot of money on the upside. Like a lot. This is a really strategic way to lock in a couple percent a month. So now we're down 80. We're probably going to hit 80 any second. The market's not even open yet. Market doesn't open for 45 minutes. So let's show this. I can show this right now. I'll take all this and I'll slide it up to where the price is now, but we'll keep the same debit. Because if you slide it up, the debit's going to increase, right? So as I move this closer to at the money, the debit's going to go up higher. You got to pay more for it. But let's say you did something like this a couple days ago, right? And instead of paying 50, you only paid 10. You'd have the same setup. It would be like $2,000. It moved something. No, maybe not. Instead of paying 50, you pay 10. I moved it a little too far. Let me move it back, actually. I don't want the price to be lower than that. One more time. So you have a $400 trap here, or $400 put spread that you're buying, and then you're selling what is that, another $500 lower than that. Let's say you buy that for 10. So your expected P&L here is almost $2,000. Way up here, it's gonna cost you $50 because everything on MES is times 5. So yeah, look, now we're down way past 80, down 82, 81. It's probably gonna hit 100. I said it yesterday. I should have said it during my stream. At the end of the day, I thought yesterday it was gonna be down outside the expected move. If it did keep going down, I figured it would be down 60 to $90, and I think it was down like $100. When it closed down there, I said today it's probably gonna go down 100 points pretty easily, and then it could go down more. If it stays down around 100 today, it might go down again tomorrow. If it goes down to 100, I think, and then comes back up to only down 50 or less, then I think that's a sign of it reversing and could be up tomorrow. Big. If when it does turn around and go up, it's going to be up 100 points in one day. So now let's see if you were to have this trade on for 10. Now I just messed it up. If you had that on for 10 and then you sold something at the money, it would be 210, right? That's like mid price. So it would be about $200 credit for the whole trade. Now we can look at that, what it would look like. So you would only have 2 short puts that aren't covered. So you want to use about $8,000 to cover that. Maybe less, maybe $7,000. But now your profits to the upside are almost 1,000. Actually, it's exactly 1,000 at expiration because it's 200. If it does drop, you still make 625 here all the way down to this other short put, and then it drops off where you could lose a couple thousand, kind of where your buying power is, 2,600. So yeah, that's actually, it's like literally right there, 26.6. So another thing you could do is increase this, put another one of these on, and then boom, you get that peak here. It is going to increase your buying power a little bit. You're going to want to have 10,000, maybe 12,000 to do that. Lowers your tail profit, but now you have this peak here that's like over $2,000. So if you think the market's going to fall a little bit lower into that trap, you can do that, and it moves your break even way down. But at this point, with volatility popping up like this, it's gonna reverse at some point. But you can see the difference there. Boom. But I mean, this isn't a bad trade to have on either. If the market goes back up a little bit, you can close this one put and take a couple $100 just out of the one put. Like I said, you only need 7,000, 8,000 to do this, and you can make a couple $100 in like a couple of days. But actually, yeah, well, if you did that again here, it probably did mess it up, didn't it? Because it would be more than that. Because if you did this before and it was like 200, yeah, see, it's taking it all the way down to 120. It wouldn't go all the way down to 120. Your credit would be higher than that. That's what I was thinking about the tail. If you put it on again and you're paying 50, so it would take it down to like 150, not 120. So you would only be taking off, yeah, 750 would be your profit at expiration. But see, if it stays here, you actually make more than that. So the theoretical profits are up here at the top. It doesn't go down to that 750 unless it's way up here, which it's probably not going to go all the way up there. It's probably going to trade somewhere. Probably going to trade somewhere between these dotted lines, here and here, in the next couple months. So that sets you up pretty well. You're almost covered the entire thing. And you don't have to do another 111 on the same strikes. The only reason I'm showing that is because I can't put more legs into the Analyze tab unless I had this trade on, which I wish I could just do these and show you that, but I don't have any money in this account. But you can put a 111 on here, like you could do buy the put here, sell a put here, and then sell the other put like down here. And instead of a peak, you would have like a flat top. You wouldn't take as much out of the tail. This would be like $900. I mean, you can even sell one down lower, or like buy it for 10 like the other one was for 10, and your credit would be 190. So this would be over $1,000 here in the theoretical expiration, 950. But yeah, I mean, you could have started this a couple days ago and be in this position right now. It would be a pretty good position to be in, honestly. So it's already started to rebound a little bit back into the 60s. And like I said yesterday, with the extra money, if you did do something like this and you had 3 naked puts, you want at least three to 4,000 for each. So let's just say $10,000. You want $10,000 to sell 3 naked puts. You're only using 2,500 bucks, so you're gonna have another 7,500 on the side. You just put that into SGov, and for the next couple months, you'll make, 3 months, you make 1% for free, risk free. Doing this, if it stays here and you make $1,000, if it stays here in the next couple months, you're making 10% off this trade in a few months. So basically by the end of the year, I think that's what I set it to. See, the end of the year here. That's 30 days left in the trade. So you're selling it, and you're selling these 77 days out, and you can close them with 30 days left and have a decent profit. But you can wait longer and it would actually grow more in here. This will come down though. This theoretical line, the longer you hold the position, this theoretical line is going to get closer to the expiration line, which is this one. So you can kind of see that swings up and swings down until they match. But that's the one reason why I like this trade. All your risk is to the downside, and as you stay in the trade longer, if it does keep going down, you make a decent amount of money, and you can just close it. Because once it gets here, if it gets down here and you're making money, you can close the trade, take your profit, and put another one on, and then you move your break even all the way down here, and you just recycle it over and over again. And if it goes up, you just make whatever's on the tail, which is normally, you can set that up to be a couple percent a month. And if it goes down here, if it drops down here, volatility is going to go up higher. So this might not be this high. It might be down here, but you're still going to make a couple $100 off of like $10,000, just say for example. So you're still going to make a few percent. It might only be, 2 months, you make $400 on $10,000. It's only 2% a month, but that's actually kind of what my target is. So it's not bad. 2% a month is like 24% in a year. Beats the market. The market averages like 10% a year over if you just buy and hold it. If you do this, I normally do it 90 days out, which is 3 months. So you can do this like 4 times a year. You set these positions up 4 times a year and potentially make, if you can set it up so you make 10% on your tail, you can make 40% in a year. That's without hitting anything in your trap. Sometimes your trap, if you hold it all the way to expiration and it ends up in here, you can make even more. $2,000, anywhere around from here to here, it's like $2,000. So that would be 20% in a year. I mean, in that cycle. So that can be 80% in a year because you do it 4 times. So you can make a crap load of money doing this, and it's low risk because it's a high probability trade. You have a 92% probability of making money on this trade. You don't have to watch it every day. You should do things on days like today. You scale in because volatility is popping up. I can go to VIX here and show you. See how it's going right into the green area. So every time it goes from one of these levels to the next level, I scale up. So now you should be almost using, you always want to keep one reserve just in case it goes higher. But you can be almost all in. Like if you can do 5 tranches, you can sell, sell 3 or 4. So honestly, probably would already be in a couple. Sometimes I'll go out longer. If I have one that I just want to leave on, Like if I had a 111 on and I sold another put and sold another 111, you have three short puts. Let's say your max is 5 and you already have 3 on, but you want to add one more. Like let's say there's another big down day tomorrow and volatility spikes up again. Sometimes I'll go out farther instead of just adding more in the same cycle. You can start the next cycle, go out here. Let's see what other people are doing. I'm looking over at the open interest now. It's the same. It's like the same as it was yesterday, isn't it? That's interesting. The 1600. These are so expensive. That's crazy. You can sell a 5,000 strike put for over 20 out 98 days. It's not even over 100 days. It's a 2 standard deviation put for $20, which is 117 because you multiply it times 5. You only got to put up 400 bucks and you can make 117. That's crazy. Yeah, so let's see. You do a $200 wide trap here. Buy the 6,000, which is 750 points below. This is the price. When you go out this far in time, the price is different than this price. It's actually this price. So it's 750 points below the market is where you can buy the put for the spread. Then you can go all the way down to the 5,000 and you get a credit. You actually get a credit for that, which is really crazy to me. Let's zoom this out. Yeah, if you get another big down day tomorrow, I would look at doing something like this because this starts the cycle for the next one. And honestly, you could go out even farther if you wanted to. But yeah, your break even is way down here. So you got a 1% chance of losing money here. You know, if it gets down here towards the end, let's go. I don't want to, well, yeah, let's just go to the end of the year. Or Christmas Eve. Go to the end of the year. You put this on, and by the end of the year, your break even is below 5,000, which is crazy. You make 90 bucks if it stays here, a couple hundred if it drops down to the 6,000 put. If it does drop down here, anywhere in here, then you just do the same thing, right? Let's see the price for these puts. If you let's say it takes a couple of weeks, but it drops down here, the price of this put is going to be close to one of these. So let's just say 200. Let's say it gets down here and we have about $5. Let's say it gets down here and you add 200. We'll just put it at 200. So let's say you can collect 200 credit on that. See how it's almost the same setup, and then let's say you do this again, but this might cost you, I mean you could do one lower, but just because I can't add more legs, let's just move this up and let's say it costs you 50, so it would be about 150 again. It's not much different than where it's at now, actually 140, but this would be your setup then. $750 on the top side. See, only having a $200 wide trap, it's not. It moves your break even way up higher, which I don't like that. Let's see, well, how can we fix that? Every time I move it, it's going to change the price. Maybe you just don't want to go as close. I mean, let's just say it goes down here and you're at 175. I don't like how I move the break even up that much. I'm also not towards the end of the trade, so that's why. There's still 50 days left in this. It would change a lot when you go further in time. So let me do that. I'll show you that. Even though this drops off very quickly, I wouldn't like that. If it got down here and this was 175, and you would probably be up a little bit. But watch, as you get further in time, your break even moves down, right? You can see all these prices up here. You'll lose less because this is the theoretical line. We'll get closer to this where you actually lose less or you'll make money. This will actually go up for a little while and then it'll come back down. But I don't like how much risk you would have here, but it's not a bad trade-off. Basically what you're doing with the 222 here is you're cutting your risk from this put. So I can show you if you just sold this one put, this is what your risk graph would look like. You can take these off here. It would look like that. You know, you make $500 and then you lose $2,000 or $1,500 or $1,000. Right at the standard deviation, you lose like $1,000. But when you have the other options on, you actually make money here. So you don't lose $2,000 until way down here. You know, your buying power is 1,700. So that's kind of what you're doing. You're moving your break even from close to this put to like way down here. Most of the time, the stock's going to stay in this range. You have that whole range covered. You could even increase this. Another one, do two of them. And you would probably be paying, that's actually pretty close. I would say 125. So it would be a little bit less, but then it moves your break even way down here. So one situation your break even is here, one situation your break even is here. The next one it's down here. But I like these setups where you have a peak higher than your tail, and you can have this little dip in the middle, but theoretically, unless you hold it all the way till expiration, you're still going to make money here. Even if it shows at expiration you lose a little bit of money here. You can normally adjust that, if that makes sense. Go get some more coffee. And we'll look at the next cycle actually and show you how far down you can get on the next one, because a break even under 5,000 is really crazy. The market's at 67.50. I wish I could see my stream. I need to keep my phone on, I think. Just turn the sound off. PJ's here. Or was here. I don't know if he's here anymore. Now the market's only down 60, so it has come back a little bit. I thought it was going to hit 100 first, but we'll see when it opens. When it opens, it might freak out. So I want to go out a little further in time, because I have gone out 120 days and done some of these. I mean, look at your prices down here. That's crazy. What are people doing? Let's see what people are doing here. Almost 800 at the 65s. Almost 800 at the 58s. 95, 96. When you go way out here, people are probably just buying these. I would think. You shouldn't really sell stuff out here. Just to get buying power. That'll probably give you back some buying power. Like if you were short this, you got to put up $900, but then if you buy something way out here, doesn't really help. I was gonna say, might not. What are the next ones? Maybe they're doing something like this. They're selling that and buying that, which isn't a bad idea. It's a decent spread. Somebody might be doing this, a $700 wide spread. So 700 times 5 is 3,500, right? But you're getting 567 credit, so that takes that out of your loss. But you only have to put up $1,100 to do this. But your max loss is 3,000, so that's a decent profit, risk to reward, but very bullish. You definitely want the market to go up. I wonder if I can. I need to get another screen. I saw these cool like screen extenders you could get for a laptop. It like clips on the side. You plug it in. It gives you another screen on the side of your laptop. You definitely need that. But yeah, let's look at some really wide traps here. If you buy, sometimes I'll buy like at the expected move. Let's go down like 500. No, you can't. That would be too much. Let's go down. Let's go down here. 250 and 150 for 55. I'm looking at the open interest again, seeing what other people are doing. There's a lot of open interest here. That's just so weird to me. People are trading way out here. I don't know why people are doing that, but yeah, I don't know, nothing crazy. You can go under 5,000 and get a $30 credit. Interesting that you gotta buy this. I would have expected this to be a small credit. It's a small credit there. I'm in the AM expiration. I don't think I want to be in the AM expiration. Actually, let's go to this one, 126. This one's probably more active. This one actually looks like it's less active. That's funny. Huh. I would have thought this one would have more options, more open interest, more people trading it. But the prices are going to be about the same. Do this, do this. So you're still paying a little bit for that. It's kind of the same thing as the other expiration. It's just crazy how little money you have to put up for this. Less than $300 you can do this. This is what got people in trouble. There were a lot of people doing this kind of trade for the last couple of years, and they blew their accounts up when volatility went up to like 60. Even though the price didn't really drop too much, it actually dropped into people's traps. They didn't keep money on the sideline, so they would do, they have $10,000, they would do like 5, 6, 7 of these, 8, sometimes 10, and they would only be using $2,500, $5,000, and they'd have 10 of these on, and they were like, okay, I'm fine, I'm only using half of my money. But volatility went up to 60, and next thing you know, even though they were in their traps, I'll show you what happens. I can show you on here. They got margin called. They had to close all their trades for huge losses. And there was one guy that was doing this, and he was way too big. He was scaling way too much. And I kind of warned him about it, and he lost like $100,000 in one day. Yes, I can show you here. If you come down here, implied volatilities at expiration, you can set it. So right now volatility is at 23. We're going to increase it by 40. Boom. So now volatility would be at 63. Actually, it's not as much of a loss as I thought. But yeah, it was coming down into here, and people were having to close their trades. Let me move it up closer, because I don't think people were that low. But yeah, it would drop. It dropped a lot. It dropped like way down here. So you would think that being in your trap, you'd be making money, and even being close to the end of the trade, like sometimes it moves down a little bit more. But if you're at the beginning of your trade, If you just put it on and volatility drops, or I mean, the market drops and volatility shoots up, if you just put this on and it goes down here, you're down $2,000 and you only had to put up 400 bucks. So that's what killed people. They were doing this like every day. Take one on, put one on, put one on, take one off. And they weren't letting the trades work. And then when volatility crashed, um, they were down $2,000 and they weren't holding extra money on the side. So, they blew up their accounts. I mean, there's no other way to say it. You got $10,000 and you have 5 of these on, you just lost $10,000. They might not all be this bad, but yeah, I mean, you lose $5,000 in a $10,000 account in one day, then you got to close half of those positions. It's pretty horrible. But sometimes what you can do, if that does happen, if your buying power starts going up, you can buy a put. It's going to cost you money. It's going to probably take away your profits if the market rallies. But you can see, I guess it didn't really show it. Let's say you have a put that's in the money and you need $3,000 to hold that. Hey, Blue, knock it off. Messing with the cat. Let's say you had $4,000 and it drops $4,000 for one contract. It drops and you lose $1,000 and you need $3,000 just to hold the trade. So you're basically at limit. You can buy a put out here. You can't go out too far or it's not going to make a difference. But you can buy a put somewhere and it will give you back some of that money in collateral, some of the buying power. See, the closer you go, the more buying power it frees up and gives you. But like I said, it takes away your profits, so you're gonna have to pay a lot for that. But if it does go back up, you're gonna at least not lose your money. You'll be able to stay in the trade without closing it. But let's see what the market's doing. So this is when we were down 80, right? Now it's going back up a little bit. Looks like it maybe got up into the only down 50 again. Free up some space. But we'll see what it does from here. The market's going to open soon. It's spiking up again. Might go back up into the 50s. Let's look at the expected move for the day. 54, another $50. So that's what I was kind of saying earlier or yesterday. I think the expected move was a lot more than that yesterday. I don't know. I would have expected it to be. I expected the expected move to be like $75. And that's actually right where it went down 80, came back up a little. So we'll see. There's another $50 it could move. That's what it's saying. It could go down here. It could go back up here. So I mean, it's right at 67. If it does drop down $50, it'll be down 100 today. which I can easily see that happening. I mean, it can go more than that. What are you doing? Need to go outside? It could easily, I mean, honestly, the market could go down another 100 points from here. I wouldn't be surprised if it ends up like at 6,600. And I also wouldn't be surprised if it goes green on the day and ends up 6760. I don't think it would go much higher than that, but I think the risk is still to the downside, if that makes sense. Whoops. Whoops. I don't need to show. Don't mean to show my clients. I need to remember to turn off my notifications on here. But that I'm excited. Jenny's coming over this weekend again. The other husky. I think she needs to go out. So yeah, the volatility spiking up. This is what I was saying yesterday. Spiking up, spiking up. It normally clusters. It'll do that for a couple of days. This one was smaller. I mean, it doesn't normally grind up like that. I mean, this isn't that big of a move. This is a spike. You know, obviously this is a spike. This was a spike. Now this is another spike here. So these are, you know, in the past 1, 2, 3 months, you'll get 1, 2, 3, 4. It happens once or twice a month. I guess you could say. I can go out farther too. See, like one here, one here. These are each, this is every month. So here's 1, 2, maybe this one. That's obviously, you could probably do something here, here. I mean, you can probably get here because it did get kind of low. It did go under 15 here a couple of times. But yeah, it's like once a month. This one, this one, this one, this one, this one, this one. These are pretty close to each other. When you get them close to each other like that, that kind of tells me that it might go down lower. I would not be surprised if it gets down to 6,600. If not today, you know, if it goes back down 100 points, it could easily go down under 6,600 tomorrow. And then that might be the bottom. Then it'll probably take off. This could spike up over 25. Probably not over 30. Like, I don't think it'll go higher than this one. But so I always want to keep some money on the side. You should just be in like 2, maybe 3 tranches. And then you can go up to 5 maybe. And then that should really only be, that should really only be like half of your account, really. If you don't know, if you want to just set them and forget them, then you should kind of double everything. So if you want to have $3,000 per trade, you might want to have, like I say, 3 to 4,000 for each contract. You might want to even have another couple thousand in reserve, just in case. Or just don't do as many. Have one down here, like I have on the other chart. Gotta zoom out. I need to get my mouse so I don't have to click on this. I actually don't have to click on it, but I just normally do. It's funny how it went into negative numbers. So basically, you don't really want to have anything on down here at the bottom. Then this can be 1, this can be 2, this can be 3. And you always want to have enough to maybe do 5, I guess, if that makes sense. 4 or 5. That way you only get 2. What would that be? What's 3 out of 5? Like 60%? You don't really want to be using much more than 60%. If that makes sense. Sometimes you can get a little bit more. Like I was saying, 3 out of 4, that would be 75% of your account. But you want to, if you do that, you want to manage it quicker. But yeah, we're in the green. In the green today, here on volatility. I wish I could take this indicator off of just this chart. Unfortunately, it goes on all the charts though. But yeah, we haven't got, what, this is 6 months. We got over it 1, 2, almost 3. I mean, this is kind of a cluster together. I mean, I guess you can call it almost 3 times here. Like if you sold a put here and then you could have closed it out the next day for a good profit. You could have sold another one the next day and then closed it the next day for a good profit. You could have sold one here and then held it. You would have been down money on this day, but then by the end of the day, you would have been able to sell it for a profit, or buy it back for a profit. And then the other one you hold until it gets down here, and you rip that one off, and then you just have one. And then as time goes on, that's a profit. And then it jumps up here, you scale up one. It jumps up here, you scale up again. It comes back down, you take one out. It comes back down, you take one out. It goes up here, you add one. It goes up here, you add another one. So that's how I trade, and it works. It works really well. I mean, every one of these candles is a day. So I go out 90 days and put those bear traps on 90 days, and then you just sell those puts when it spikes up, and it never stays elevated. So you always just sell them and then you take them off. And you can kind of see this range in here. I mean, this is a couple months. August, September, October. When you have one on here and it doesn't really go anywhere, when volatility doesn't go anywhere like this, the market's generally going up. So you make money off of that one. But the most risk is here. The most risk is when it's down here and it goes up to here. If you have a lot of positions on down here and then volatility goes up here, you're going to get killed. So that's what you have to be aware of. I can go back even more. Let's go back a year and you'll see the big spike. See, there's the big spike. But it's the same thing. So let's say you got in here and you were in like with 3 positions, and then the really big spike. This is what killed people. And then it goes all the way up here. But look how long it lasts. It's a month. This is 1 month. So from here to here is a month. So if you're able to hold that through that time, you're going to make a shitload of money. And then even if you can add one more when it gets up past here, like, that's even better. Either doing it on this day or the next day. I mean, you would have killed it. That's like free money. You just hold it all the way through. But this never happens. Like this like rarely happens. Um, even though it's happened twice in the last 2 years. Before that, it's almost never happened. So normally you're just trading these. It's a couple of days. Goes up here, a couple of days, you're back down. Goes up here, a couple of days, you're back down. Up here, a couple of days, you're back down. Goes here, you got to hold it a little bit. You're gonna lose a little bit of money here, but then once it gets back down here, once it gets to the same level, time's gone by, so you're gonna make money off the time, and then it normally just goes back down anyway. So then you can take them off. There's been a couple of times in history where it's spiked up and it's taken 2 months to come back down. I don't think there's ever been a time in history where volatility has spiked up and not come down in 3 months. It's always lower in 3 months, like always. So if you get in when it spikes up and something like this does happen, you just have to hold it for a little while and hope that you weren't in a lot down here, because if you were in a lot down here and it goes up to here, that's when you get killed. But if you get in like somewhere in here, then you'll be fine. You just got to hold through this, if that makes sense. Look, back down 80. Told you. It's probably gonna go right to 100. Blue. Can you see her? I don't know if you can see her or not. I don't think there's anybody even watching my stream anyway. Blue, you're such a cutie. Do you have to go outside? I'm gonna let her out. Like now we're down 87. I'm gonna let her out and come back. We're probably gonna be down 100. Come on. Go outside. No. All right. Well, I guess she doesn't want to go outside. So yeah, let's just watch this for a minute and see what happens. Want to go for a walk? Somebody wants to walk. That's what it is. Oh, didn't go anywhere. Not surprised. I'm really not surprised at all. So what's moving the market? Let's see what's moving the market. Let's try to add some. What? Let's check Tesla. If I can spell. Tesla's down 12. Damn, Tesla's rallying. That's probably bringing the market back up. Let's see. Apple's crashing. I love the short Apple. But now it's actually gonna come back up a little bit. I mean, you can see the market's coming back up already. Doesn't want to get down past that 80 something. Let's check Microsoft. Looks like things are starting to rally here. Meta's been on a freaking drop. Yeah, it is under 600. That's crazy. Let's look back at Meta for the past year. Did it hit 800? I don't know if it hit 800 or not. It was really close. 795. Yeah, 795. 790. 795 basically hit 800 and now it's at 600. Like, damn. 25% drop in 2 months. I mean, this killed it. That was earnings event, I'm pretty sure, and it's just freaking plummeted since then. Let's see what the other big ones. Nvidia. It's down a couple dollars today. I want to see that today. Yeah, it's rallying back a little. All these tech stocks. TQQQ is all of them put together. This I was telling my dad, if you want to buy something a few months ago, if you want to buy and hold something, this is what you should have grabbed. Two days? Yeah, so look at this. Back in April, when everything was crashing, it hit $40. It got down to $35. Wow. I saw it under 40 bucks. I said, you should buy this under 40. This is a steal. And he's like, I don't know. And then it just hit 120 the other day. Went from 40 to 120. Now it's back down to 100. Yeah. Like, look at that freaking rally. Like, that's insane. But this is what you get a lot of the time. These V bottoms, it'll drop down and it'll go back up. And it was at the same spot a couple months later. Boom, boom, boom. What is that? 1, 2. Yeah, it's like 3 months. February 21st. June 21st. Yeah, February 21st was the big down day. So, I mean, what's that? It's a little bit longer than 3 months. But it doesn't take, that's just the stock price. Volatility probably came back way before that. Volatility probably came back like right here. So that's what happens a lot. It'll drop, it'll go back up. It doesn't have to go back up as high for volatility to come back to the same place. So that's when you make a lot of money on your bear traps. I mean, it does it in everything. Like volatility was probably back here from this drop. I mean, I don't know if that's the best example, but oh, you can see it. Let's look at it. October 10th and October 20th. It's this big move, and then right there. So yeah, it's the same in the same spots. It depends what time you're calling it. I mean, if you're picking it from here to here, then yeah, it's still up a little bit, but that would be, I mean, that's actually pretty even, so see the 23rd. The 23rd was the same price, and the volatility came back a little bit, but it actually wasn't back down until the 24th, which was the next day, which it actually did go a little bit higher. But it doesn't have to. If it stayed the same price here, this would have still dropped back to this level. It would have just probably taken a couple more days. But see, back into the 50s, maybe that's the bottom. I don't know. It might go back up and close down 30. You might get something kind of like this. It might even go back to being green. You might get like a cross, something like this. See, it drops down and then comes back up and closes almost exactly where it opened. That happens sometimes. Or it's just or it's just trying to fake people out and it's just going to crash back down here. You're going to see like Tesla will come back down. Nvidia, that was up a lot, might come back down. It'll happen really quick too. See? Like this will be right back down here in like a couple of minutes. Tesla's already pointing down. I think it's still sell the rallies right now until we get unless this comes back up, then it's going to be a buy signal. But right now it's still I would still be worried about the downside. I'm still worried about it coming back down and making a new low. The risk is to the downside. Always, that's what I always look at. It's like, where's the risk? Where's the risk? The risk is this popping up one more day. So I don't think that's a hell of a move though. In Nvidia. Like it's going up even more. Damn. That's crazy. That's a crazy candle. It might go green. Only has to get up to here to be green on the day. That's wild. Tesla's still down 10. I don't know if it's going to last though. Apple's not going anywhere. Let's check Amazon. Amazon's pointing back down again. Notifications. But you can see that we're down around what the expected move was. This morning at least, it said it was a $50 expected move, and we're at about a $50 expected move. As long as it doesn't go back down to like 100, you can see volatility is, it looks like volatility has come back down more than the market's gone back up, if that makes sense. It's really stretching. I don't know if it's going to be able to continue there. That's a hell of a candle too. It's a lot of green candles in a row there. There's red ones don't even really count because they're almost flat. S&Ps are back in the 40s. Volatility's back under 22. There's another buy there. It's really stretching. I don't know if it's going to go green or not though. $0.17, 15 cents, 12, 10, 8, 4. It's too fucking hot. 2? Even. It didn't go green though. I didn't see it green. There it goes. Now Nvidia's green. That's crazy. That's a hell of a move. It just went up $5 in each one of these is a minute. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Like 15 minutes it went up $5. Now people are going to short it. This is almost in the 30s. Back to 21.50. See how this is almost even now where it opened and we're still down $40. You can almost, today could be almost one of those days where the market's down and volatility is also down. If it closes in that space, and that's normally a sign where it's going to change direction. So I think if it closes up here, it's probably going to start going back up tomorrow, possibly for 10 days. So you get these big rallies like this. Anywhere from like 5 to 10 days, it could just be like straight up again. It'll easily, if it does turn around, it'll easily get back up to where it was, 68.50 to 6,900, and potentially even higher, potentially up to 7,000. Could see 7,000 in a week. Probably be back up to 7,000 in a week. Next Friday. But let's look at the chart on here. I took the probability cone off. Let's put the probability cone back on. I can't see. Probability zone? No, probability cone. How do I take all those numbers off? What is the price bubble? That doesn't even do anything. And the date bubble? to take them off. The target line, that's what I'm looking for. What did I say? A week? See the probability cone, the green line, it normally stays within the green line. So if it does go back up, what, 7,000? I said 7,000. Or did it hit 7,000? November 23rd, what's today? The 14th. So that would be Monday, right? The 23rd. Sunday, yeah. Or the 24th. Either next Friday or the following Monday. We could easily be back at 7,000. Next Friday, it's definitely doable. Next Friday, back to 7,000. That would actually be all-time highs. It's never got to 7,000 before. But in the same amount of time, it could go down about the same price, down 300. So it could be at 6,400 down here, which would be kind of crazy. But I mean, that's the range. It's most likely going to be in that range, 70%. Got a 70% chance of it being in that range. I mean, it could even just go straight across, be flat. But you always get these V bottoms. Comes down, goes back up. Comes down, goes back up. Sometimes you get a little one inside of a bigger one. We'll see what happens here. It's an interesting couple of days. I was saying the other day when we had this kind of cross here, I was expecting it to be a down day. Then it closes at the bottom. I was expecting it to be another down day. So we'll see what happens. If it closes at the bottom, it might be another down day. If it goes back up and kind of looks like this, and it's like an inside day, probably going to get a change of direction, just like what happened here. But you never really know. I don't like watching the market every day. The only reason I did another stream today is because we were opening so low. I wanted to show some of those prices. I mean, even if you look at them now, this was what, 60 earlier, now it's 55. This was over 20, now it's under 20. So like those prices don't last long. They don't last long at all. It's rare to see that. We still have a $50 expected move from here. Could go up or down 50 bucks. So it could be down 90 or up 10, which is basically what I've been saying the whole time. I don't think we'll be green by the end of the day, but we might be pretty damn close. I think it's either going to be down 100 or I said down 50, but if it didn't get down to 100, if it only got down to 80, it might close around here. I was thinking it'll give back half of what it did. So went down 80, now it's at 40. Might just stay here. Might go back down below 80 and make a new low. Might go up almost green. I don't think it'll go up and become green though. I don't know. That's a big move to go down 80 and then all the way back up 80. The expected move is around 50, which I feel like it was higher yesterday. I mean, the expected move for the next day is only 60. I feel like that's really low. But sometimes, a lot of times you'll get between 2 and 3 times the expected movement, and then it ends up being within the expected move. So if the expected move was like 50 for today, we can expect the market to move between 100 and 150 points of movement. So if it goes down 80 and then back up 40, that's 120 points. So that's like right within that range. If it goes down 80 and comes back up 80, that's 160 points. That's over 3 times the expected move. That's a lot. I mean, it can happen, but it only happens like less than 5% of the time. So we'll see. See, they did sell it here. It got up here and they sold it, but then they bought it right back, which is funny. Amazon turned around. Tesla turned around. Could have bought anything this morning. Bought anything at the open. You would have been really nice if you're a day trader, but I don't normally recommend that. Apple turned right around. Back over 500 for Microsoft. 503. Look at that. Making some new highs on the day. I don't know what happened here. This is a wild candle. Bing. It just like filled somebody. Filled somebody real quick. Got somebody out. Somebody either made a lot of money on this candle or lost a lot of money on this candle. That's why I don't trade individual stocks, because you don't see stuff like that on individual stocks. I mean, on the ETFs. Yeah, it happened here too. Something like freaked out. If you have stops in, like this will stop you out, but it didn't actually go anywhere. But you can take big losses on things like that. It'll just go hit your stop and come back down. You'll get filled. You'll lose a shitload of money, and a minute later you're gonna be like, what the hell? It's at the same price, and then it actually went down. So if you shorted the market here before the open, but you put a stop loss in, and then this happens, you're gonna hit your stop loss, and then literally a couple minutes later, you would have made money on the trade if you didn't have a stop loss in, if you were just watching it. But like, don't day trade, because that's what happens all the time. Literally happens all the time. I mean, it can even happen on ETFs, but it's just a lot less likely to happen. It looks like this might be turning back down. This had a red candle there. Might stop going up at least. We'll see. I mean, this is in the 30s. So one of the other watch lists here. I don't have my net change in here. I thought I had net change on here, but can't believe Robinhood's 120. That's crazy. Oracle. JD is still 30. That's funny. I want to look at that for like a year. This has been $30 for as long as I can remember. It was a little bit higher, but Yeah, basically all year it's been in the 30s. Probably a good time to sell a put in there. Nvidia looks like it's turning back down. This is back down 40. This ticked up a little bit. Back to Tesla. Yeah, see, look, boom. It's selling off again. Oh, wait, no, this is not the day chart. Almost looks pretty similar, though. Yeah, it is starting to sell off a little bit there. Didn't quite get to 400. 398.70. Look out below. Things normally fall faster than they rise. What time is it? 10 o'clock? All right, I got some stuff I got to do, so I can't stream much longer. But definitely a very interesting day. Got to take advantage of that VIX when it gets over 22 because it does not get there very often and it does not stay there very long. We can let's look at the money put right here. We'll go to the 77 like I normally do. It's trading for about 200. Boom. Let's see what this is tomorrow. 67.50. Well, I guess the market's closed tomorrow. Monday, Tuesday, one of those days. If the market turns around, we'll see what this goes to. You know, I say you should have like 3,000-4,000 for these, at least. But you can make $1,000 max if you hold it all the way to the end. But if it goes back up, I mean, if it goes up 100 points, this is going to go down from 1,000 to 840. You're going to make that 160 bucks, and it could happen in a day. If it goes up 100 points from here, you make 160 bucks off of 4,000, 3,000, 4,000. But it could be a good time to do the one for one trade. Not SPY, SPX. No, if it left. All right, let me check that. That's not good. She didn't leave. She's right in my backyard. I can see her. Maybe her collar died. I thought she escaped for a second. I can see her and Goose right there. They're just chilling in the yard. Nova's picking on Goose. Like always. Goose is just standing his ground. I don't know why it said that. It doesn't. It's normally her range is way bigger than my backyard. She would have to be like my base is offline. It says she's down the street, but she's not. How does it telling me where she is if my base is offline? That doesn't make any sense. But I have the Fi app. And it tells me, let's see, I don't want to like completely like, dox myself here, but it tells me her sleep and her activity. Now it updated. She's home. I don't know. It says she went. It says she went for a walk. That's funny. It's saying she went for a walk for 8 minutes. She better not have escaped and came back. Oh, that's cute. This is a picture of her. From a year ago. She got the crazy eyes. It's like when I just got her, actually. You can see that. There's a play button in the way, kind of. She got her original collar on. That's funny, I'm talking about her collar, and it shows a picture of her with her other collar. God, people are stupid. I hate stupid ass Americans, man. I gotta deal with them all the fucking time. Alright, she needs to go outside, I guess, now, too. We're just waiting around here. So, yeah, what I was saying is you can do something like this. You gotta move it up a little bit. We're at basically 6,700. You do something like this. Risk 250 to make 250. It's actually bouncing all around. You can go a little bit in the money here. So all you need is the market to go up $15 tomorrow, which the expected move, I mean on Monday, when I say tomorrow, I mean Monday. The expected move here is $80. You only need it to go up $15 and you make 100% on your money. You don't want to, obviously, you don't want to just throw all your money into one trade, but either you're going to lose 100% or you're going to make 100%. It's not normally going to end up in between. We can look at the Analyze tab right here. So that's how it's set up. All it has to do is go up $15. I mean, that's it, because you hold it until the end. So either you make it or you lose it, right? And all it has to do is go up $15. It's going to most likely stay inside this range here. But when the market's dropping for a couple of days, I normally wait a few days. Like I was saying, if it's an inside day, then you can put it on at the end of the day. If it closes down 80, down 100, then don't do this. You wait till the next day. Then you can possibly put it on the next day, because if it closes down like today or like yesterday, if it closed down 100 points, today it's down 80 points, so it's probably not going to be green. So if you did it yesterday, it's going to be 100% loser. But yeah, if it closes around here, comes back up a little bit more, possibly put it on for tomorrow. And then keep doing it. Do it for like a week, 2 weeks, and you're probably going to hit 6 or 7 out of 10 of them. So you'll probably make 1 or 200% pretty easily within 2 weeks, which is kind of crazy. See, it drops down. Now this one actually dropped down. Well, this isn't the futures, so you're going to get different kinds of candles here, but if you did it the next day, you probably wouldn't have made any this one. You probably would have made some on that day. Probably not there, but then you probably would have made it there. You probably would have made it there. Probably would have lost there, and then I probably wouldn't have done it for the next day. Then at this, when you see this kind of candle, maybe I would have done it for the next day, but I don't know. I mean, you count them all. 1, 2, 3, 4, 5. Maybe you win 5 and you lose 4, so you're up 100% kind of thing. This one, it's a lot of stress trying to do that every day. I mean, it's not really. It is if you look at it, but if you just do it the same thing every day and you don't look at it, it's not as stressful. And when you get runs like this, you're gonna end up winning. But basically, you're just playing on more up days than down days, which is that's always the case. There's always more up days than down days. Just they're not all always going to be up $15, which is basically what you need. Sometimes they're only up like $10. So then you would still lose. Or they're even. Like sometimes you get these even days. Like these two. If you did it here and then it didn't really go anywhere the next day, you're probably not going to make that money. All right, yeah, I gotta let her out. All right, I'm gonna end my stream. Thanks for checking it out. If you were here, I know PJ was. I guess people might watch this back later, but peace.